0.3% above expectations. The market initially reacted quite positively on this news and then retreated, probably realizing that that's quite a number above expectations. It came in, I think, at 3.7%, with the consensus expectation at 3.4%. But that's kind of all I wanted to talk about, and also highlight how low the volatility is in the market right now. Now, onto PayPal. Can I remove all these drawings? Let's see. I don't want these. Okay, well that didn't really work, but we're going to be diving into PayPal for multiple reasons of a long-term investment, and kind of just think of it as a pitch. PayPal is trading at its lowest level since 2017. Isn't that crazy? PayPal has been unable to recover from its high in summer of 2021 and has taken a tumble around, let's say, wait, hold on a second, looks like we can't see, of around 80% in value from its high to its low just in the past month. Now this is something fascinating to me, as PayPal is still a leader in financial tech and transactions in commerce. PayPal has certainly been getting hammered, and it's something to certainly keep your eye out on whether they could possibly come out as a recovery, or if they're going to kind of remain under the radar. You know, it's something I like to watch, but I have recently been accumulating shares around that $60 level, as I've started to believe that this is just too low for PayPal. As you can see, it also has a falling wedge, which is generally a bullish trading pattern. As you can see, earnings have only been going up. You know, they've been up and down, but overall trend has been an increase in their earnings per share over the last 5 years. Aside from the technical analysis, but one last thing on the technicals is PayPal does have some big support of this area. As you can historically see from here, you got this rectangle of support that kind of can trend down all the way down here, all the way back here. You know, it's got this channel. You know, maybe I would raise this up a little bit, like to here, which isn't good to note since PayPal did drop below. But that does not mean much. What means the most is the fundamentals of PayPal. Spiders crawling up and back and down your back, and spiders crawling up your back and down your back. Okay, now let's look at some of the fundamentals of PayPal. Right now, most people say to avoid PayPal. Most firms, again, I went over this in the last video, that I believe this is a good sign. Good sign. I believe this is a good sign because this may mean that banks and hedge funds are actually loading up on the stock, but they don't want to boost the stock price too much, so they tell Wall Street to sell. Again, this is just a conspiracy theory, but it's what I believe. Now let's see. Their 5-year trend on earnings per share is not bad. Again, the last year they've went through some turbulence through competition of other companies, but they are remaining strong, as they have a new company within PayPal called Braintree that is growing rapidly and bringing long-term customers at a high profit margin, and bringing in a whopping billions of revenue to the company. Mostly here, I just want to go and highlight over their valuation. Their price to earnings ratio right now is sitting at 16.65, and their 5-year average is 53. So you can see usually PayPal is trading at a higher multiplier, and right now you could consider this a bargain, especially sitting under 30 for a tech company. You also have a price to book value, a good rate, and same thing still